Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is what's moving. Covering the S&P first, strong day in equities. They bounced right back. We're seeing the S&P and the NASDAQ both test levels in which they settled on Monday. Those levels there are going to be strong resistance, but those resistance levels held. We're seeing 2806 in the S&P, 8692 in the NASDAQ. We start getting out above there, especially the NASDAQ. You're going to see a little bit of another bullish wave, and tech could again be a leader to the upside. But until that, we do see support to the downside. 2750 was our pivot in the S&P. That's now going to be about 2750, 2760 as support. Don't underestimate 2787 as being an area with a lot of volume. You can start to see the market sort of tether into that area into the open tomorrow if it's not moving higher. And then with the NASDAQ, 8500, 85 and a quarter. 85 and a quarter is our momentum indicator. It's going to rise through the night here because of that price action overnight. But something to keep an eye on here. First, data tomorrow. Flash PMIs out of Europe, here in the U.S., and U.S. jobless claims, weekly jobless claims, going to be very important to watch. Going to set a tone tomorrow morning. But also, energies. You now have the introduction of negative strike prices in crude oil, which these Black-Scholes models do not have priced in. And you're going to have to introduce a new model called Bachelet. And a lot of these third-party platforms, we use CQG, doesn't have it yet. Even Bloomberg doesn't have it yet. They're working on introducing it. But it's going to cause carnage. I mean, it's going to cause a lot of volatility in the market. Be prepared here in crude oil. You're going to see a lot of volatility. I don't know if we'll wake up tomorrow morning and see at a negative $5 in June or a positive 25. So manage your risk in crude oil. Let's take a look at the other commodities. Great day for gold. Gold traded higher here despite that deflationary wave yesterday. Very nice bounce back. 1660 held support yesterday. Really strong move through resistance. But if you are long gold here, this is sort of where you want to start to capitalize on it. This is certainly not where you want to chase gold. And silver had held support pretty well yesterday, 1450, another wave. But 15 and a quarter is becoming a little bit tethered to that area. Silver is still a laggard, and that is one of the reasons, or just another reason why we are a little cautious here on this move in gold. And then also the treasuries. The treasuries took a bit of a hit here early this morning. They haven't been able to shake it off. So again, the treasuries right there could also weigh on gold, but the flash PMIs, the jobless claims tomorrow are all going to play into that. And then the U.S. dollar is stronger. That's another headwind for commodities, headwind for gold. U.S. dollar, we've been bullish the dollar, and I still am bullish. I do think gold over the long term can move higher with the dollar, but I think we're about to see a strong wave here in the dollar. There's some serious weakness in the euro developing through today, and tomorrow's data is going to play a big part in that. Give us a call, though. There's going to be a lot of volatility out there for the next 24 hours. We're here to help. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks a lot.